Hey, what's going on, guys? Welcome back to my channel. So in this video, I'm going to do a market recap and update. So I basically said I wouldn't make one of these videos until a very special thing happened in the markets, and that actually happened today. So it is going to be an interesting one, in my opinion. So let's just jump right into it. So Nasdaq and S&P and Dow Jones are selling off, so to speak. I mean, considering the run that we've had since the March bottoms, it's not necessarily like a huge correction so far. I mean, the swiftness of the Nasdaq has been pretty interesting, I would say. If we take a look at how much the Nasdaq's actually corrected from the peak to where we are now, that's about 11%. But keep in mind, the last few weeks of the Nasdaq rally, we saw the Nasdaq basically go parabolic, and so those kinds of stats, like 11% from the bottom, can be kind of skewed, especially with, like I said, how parabolic everything's been, and so that number is bigger than it actually is, in my opinion. Hopefully that makes sense. But let's go ahead and talk. Yeah, basically take a look at that special thing that I mentioned. So this is a 4 hour time frame on Nasdaq futures. So basically, each of these candlesticks represents 4 hours worth of time. And so what I was waiting was for basically a break of the 200 period moving average on the 4 hour time frame on Nasdaq futures. And yeah, we finally got that break. And so after hours, as I'm making this video, it's about 6 p.m. Here in California. So after hours, we do see a nice bounce. And so the question is, did we bottom yet? Now, one thing about corrections basically is that we generally don't go straight down, and so it's possible that we bounce. Maybe we even have a green day tomorrow. But what I'm really watching out for is this green line, which is the 200 period moving average on the 4 hour time frame. I think this is going to be the most telling. And if we do recapture this, we end up using it as support and we head higher. I think that would be a perfect sign to sort of get back in. But for now, I'm playing it a little bit more safe. I mean, obviously, yeah, I'm sort of buying in as we head lower. I think it would be a little bit silly not to. So I'm not like 100% cash, but I do have a lot of cash reserved because my bias is to the downside. Unless we recapture that shorter two moving average that I talked about. And I'm totally okay with waiting to see what happens, right? I mean, I don't have to have like a horse in this race to know that I'm just going to pick the winning horse. So I'm just standing in the finish line to see what happens. And yeah, I mean, generally, like if we do bottom here, that wouldn't be surprising either, right? I mean, 3 straight days of red. Obviously, it's a very sharp correction. And you got the 50-day sort of acting as support. So yeah, that could very well happen. But considering that we actually broke that moving average, and I think it's quite significant. I'm sort of zooming out as basically the next levels of support that I'm going to be watching. So we have the 100 period moving average on the daily time frame, as well as the 200-day moving average, and so this would basically be the areas that I'm going to unload the cash that I have and make it go to work. And I'm still not sure exactly how much I'm going to buy if we do get here. I would think that the 100-day moving average would be the next area that would be of interest as a potential bottom if this isn't the bottom. And if we do break the 100-day moving average, then the 200-day moving average would certainly be something to watch out for. And so, yeah, that's basically the NASDAQ. Let's go ahead and take a look at the S&P 500. So on the S&P 500, the area at which I thought we would get rejected at was maybe a few percentage points away from all-time highs or at all-time highs. So basically this range, the market ended up going maybe like 1.5 percentage points higher than what I thought we would stall at. So maybe like 4.5%, where I was expecting something like 3.5%. So all in all, sort of like a decent prediction, in my honest opinion, on the S&P 500. And so, yeah, what this period reminds me of is the period here in 2018 where we sort of stalled like slightly above all-time highs. And even on the retest, we used the all-time highs as support, but ended up crashing down once we broke that support level. And so, yeah, in my opinion, the reason why I thought we would stall here, or the two reasons why I thought we would stall here and actually get rejected and have trouble here, is number one, investor complacency. So I think, like, as we sort of talk about these really strong rallies, like obviously the Nasdaq went up like 70% since March. You know, the S&P went up like 50% since March, or something crazy like that. So people doubted the entire rally as it was unfolding. You guys remember April, May, people thought it was just like a counter trend rally. A lot of people went into cash around March and April. Obviously, with there being a reason for this crash, which is the pandemic, it feels more real. And so the fear is more real, right? I mean, people are getting laid off, et cetera, et cetera. All these things are real factors for why there are recessions. And so people really honed into that fear and just didn't trust this rally as it unfolded. But there's something that happens when we get above all-time highs, in my opinion, which shifts investor sentiment. I think when we get to all-time highs, that's the point of ultimate complacency, because that's when things feel safe. That's when it's like, okay, I guess the market's back to normal, right? It basically recovered the entire length of this drop, this really, really scary drop. And now we're back above all time highs and we're still going up just little by little every single day. It kind of feels like there's not that much to fear. And so, yeah, that's the point which I start to get fearful myself. And I think a lot of folks should start to get fearful at those, points. And so that's why I started to unload a lot of positions, even as the market kept on going higher. And no, my timing was not perfect whatsoever, right? I mean, I started taking profits as early as like late July, and you can even go back in my videos, and that's okay with me. And so I am going to talk more about strategy in general. The last thing I want to touch up on is another reason why I thought this all-time high level wouldn't hold as support is because since the market had made up this rally in a short period of time, obviously it's starting to get tired, and a retracement of this rally, like a deep retracement, wouldn't just be a few percentage points, right? And so what I mean by that is if we were going to use this all-time high level as support, I think the market would have had to rally like an additional 10%, and then it can correct like a decent amount, like I'm talking like a decent 10% correction, and then it can use all-time high level of support and then keep on rallying. But I just saw that as the least likely scenario, and so this is where we're at now. And I would say that I think the S&P probably has less downside than the Nasdaq, and so I would be looking at orange or green if blue doesn't hold as the next areas of potential support. And yeah, just in terms of strategy, as I mentioned, so these corrections as they're unfolding, depending on how people manage them, that has a direct effect as to how far someone can get ahead. So let me repeat that. So if we were to take a look at the market over the past 10 years or so, 10, 15, 20% corrections are not super rare, but they're still uncommon. And how you position yourself against those corrections will determine how far you get ahead. And the last point I want to make is the idea among long-term investors is that you cannot time the market and you shouldn't even try, meaning that the best approach to investing is dollar cost averaging over the long term. Get your VOO, get your diversified portfolios in all your different sectors, and just dollar cost averaging. And that is a perfectly acceptable strategy. I'm not saying I time the market with 100% accuracy, right? But what I do in my analysis is I understand there's points at which is least likely to be profitable to get leveraged. And there's points in which it is basically a higher probability scenario or a lower probability scenario. And so that's when I started to add more leverage or take on leverage. And so that last point I want to touch on is leverage. So this is not a channel that tells people how to leverage themselves. I think leverage is a spectrum where on one hand you can have, some calls that expire the same week that you buy them. That would probably be like ultimate leverage on margin, right? On the other hand, I think like adjusting what someone buys, meaning like if you buy something that's more likely to fly high or just be more volatile, I think that in itself is a different form of leverage compared to the S&P 500. Meaning like there are some individual tech stocks or tech ETFs that just move quicker than the S&P 500, and I consider that a form of leverage. It's almost like a redistribution, and so yeah, I want just to tie everything up. How you position yourself during these corrections determines how far ahead of the curve that you get. And I don't make this, these types of videos. I don't make this content to try to convince anyone that what I'm doing is the right thing to do. I just find it interesting, potentially beating the market on a consistent basis. I find that to be extremely fascinating, and that's what I do. I'm not here to, like I said, prove anything to anyone. You guys could just like stick around for the ride and whatnot. So yeah, I think that's where I'll wrap it up. Let me know what you guys are doing. Just to sort of recap my strategy, I would say I'm waiting to see what happens with the Nasdaq and that 200 pre-moving average on the 4-hour time frame. But yeah, I still have a lot of cash that I'm willing to deploy depending on what happens. And just as some housekeeping, so basically I put out updates way more frequently on my Patreon just because it takes like 15 minutes to put out a blog post. I'm way more likely to put a post out on there than on YouTube, if I'm being completely honest. So I just had to remind folks that you can go ahead and check that out. It's like $1 a month if you want to subscribe. But with that, I will see you guys in the next video.